So I'm going to just introduce our speaker today, Michael Flaxman. So Michael is an investor and an entrepreneur who lives in Austin, but he's had a long history in technology and Bitcoin. So he went to Brown University where he studied economics, and then he worked as the lead engineer at Thumbtack. I don't know if you know that company. It's a unicorn. It's kind of like Amazon for home services, like if you need a plumber or a handyman. And so he did a lot of the back-end development for Thumbtack in his early years. Then he worked as principal engineer for Paxos, and then he went hard into the crypto rabbit hole, especially the Bitcoin rabbit hole. And then he programmed his own Bitcoin wallet, and he has a lot of new technologies related to Bitcoin that he'll talk to you about today. And he's a Bitcoin evangelist and a good supporter of the development, and he knows a lot about the technical side of Bitcoin. So I'm guessing there's going to be a lot of variation in the group today about how much familiar you are with Bitcoin. I'll let Michael decide where he wants to place the talk. He spoke last year. He came to campus last year for a Bitcoin for developers, more the technical side of Bitcoin, and today he'll be a little bit more general. But if you have questions on the technical side, you could ask him that too. So he's definitely well qualified for that. So without further ado, here is Michael Flaxman.
Hi everyone, thank you for having me. It's always fun to talk about Bitcoin. The talk's going to be about half an hour. The slides are available online, so don't feel any need to take notes unless you like to. And the most fun part is the Q&A afterwards. So that's where we can talk about anything that's interesting to you in Bitcoin. I am a software engineer. I've written open source Bitcoin wallet and block explorer, and I'm the technical editor of the O'Reilly book Programming Bitcoin. So I know all about the Bitcoin network and how it works. I love talking about that. Today is going to be more about Bitcoin maximalism and why Bitcoin is great money, but part of it is backed by the technical reality of how awesome it is. So let's jump on it. So there are sort of traditional features of what make good money that predate Bitcoin by for a long time, and we'll see how Bitcoin fits most of them really well. So the number one thing you want in a money is scarcity. This is something that we look at the US dollar and we're like, it's not so great. Like, they can print more US dollars in 1 week than there are the total market value of all Bitcoins. Bitcoin has a set schedule. Anyone who's into Bitcoin, one of the first things they'll tell you is there will only ever be 21 million Bitcoin. And this really is unique in a way that we'll see more about later. It's portable. It's really easy to transport. So it might be easy to send like a bank wire across the world. Not super easy. Maybe it takes some number of days to clear. But it's a lot better than gold, where you would have to physically bring your gold across the world. And that's caused a lot of problems in the past. You want it to be recognizable, meaning it's hard to counterfeit. Money's no good if you get paid in it, and then it turns out you didn't have the real money. So that's a really important property. And you want it to be divisible. If I want to make a payment of $500 and I have to shave off some gold from my gold bar, that's obviously problematic. Obviously, dollars work really well for this. You can, have something paid down to the penny, but in Bitcoin, you can pay down to the Satoshi. That's 100 million of a Bitcoin, so that's pretty neat. And you want it to be durable, so it doesn't decay or go bad over time. But one of the really cool, neat factoids about this that I like with gold is that all the gold that's ever existed still does. So somewhere in the world, the Pharaoh in Egypt's gold is still out there. Cleopatra's gold is still out there. Now, maybe it was on a ship that crashed and it's at the bottom of the ocean, but somebody could recover it one day. It's all there. If you're storing paper bills buried in your backyard, that might not go as well. And then fungibility. You want every unit of the currency to be indistinguishable from any other. You wouldn't want to be pay me these bills instead of those bills. And we do see this in some places. Outside of the country. So there are more $100 bills than there are $20 bills in circulation. They don't see the light of day very often. They're used as store value. But there's certain serial numbers and vintages that people don't like to accept because they've been they're often counterfeit. Doesn't mean those ones are, but people who counterfeited those ones. So that's a problem. But generally, dollars work pretty well for this. You see this in gold coins too. Gold has a spot price per ounce. But a South African Krugerrand might trade at a premium to that of say 20% because it's considered the best 1 ounce gold coin. And then Bitcoin has a new property that we'll get to called censorship resistance. And that's because it's digital. No previous money has ever been able to have this because no previous money is digital. So here's what Bitcoin creates, and it's something that's really new. So we talked about scarcity being an important property of money. Bitcoin is not only the first time civilization created digital scarcity, it's the most scarce commodity in human history. And that's a really weird thing to try to grok. But one way to think about this is gold is very scarce. We see about 2% of the gold supply come online each year. But it's affected by the price. If the price of gold goes up, there are more inefficient ways that we can get gold out of the ground. And people will do that. In a big year, maybe the supply of gold will increase by 2.5%. Because if the price of gold goes up, it becomes worth it to do. Similarly, if the price of gold goes down, we might cut back on some of the inefficient production. So gold's supply isn't totally scarce. It's a factor of how badly we want it. Bitcoin has this thing called difficulty adjustment. We can talk about how that works, but it's part of the mining algorithm. And what it effectively means is that if a lot of people compete to get more Bitcoin, there still will only be the same inflation schedule or emission schedule for Bitcoin. So we're eventually going to get to that 21 million. Right now, it's 12.5 Bitcoin are mined every block, and we know that falls every 4 years and a half. So around May 2020, we're going to see that fall to 6.25 Bitcoin per block. That's like going to be so fantastic. Bitcoin scarcity will be proven to be credible when that happens, and it will become not just the promised most scarce asset in human history, but it will actually be that in May 2020. If you know how Bitcoin works, this is like a definitely going to happen thing. It's happened twice before. It's like clockwork. It's the most important rule that the economic knows enforces Bitcoin scarcity. So that's going to be really cool. I wish we could just fast forward to 2020 right now. It's trustless. So one of the unique things about Bitcoin is that it's easy to run a node to fully validate. So you could run a node even on a Raspberry Pi. I do that for fun. But you could do it on your laptop that you use for school. The resource requirements are really low. And so you can say, for sure, yep, there's only 21 million Bitcoin. None have ever been double spent. Every Bitcoin that moved was properly signed for using a private key that attests that the owner intended to do that, and a number of other consensus rules, things like the block size. You can say that all of that really happened, and when you receive Bitcoin, you know you got the real thing. So that issue of recognizability, is that real gold or is that tungsten that's been covered in gold? That's really hard to verify, and we've seen some central banks discover that they had tungsten bars with gold wrapped around them. That's not a thing that can happen in Bitcoin. So that's really cool. It's the easiest to verify. And that gets to the security. Bitcoin is a massive open source project with hundreds of contributors. Some of the smartest people in the world are constantly looking for ways to break it. Spoiler alert, you can't, which is pretty neat. When you dig into how it works, it's even more impressive. And you also see this in Bitcoin versus some of the other coins. Like Bitcoin has really great multi-sig support with statically analyzable templates. You look at something like Ethereum, they're famously lost a ton of Ethereum in the parity multi-sig bug. It was a very popular multi-sig Ethereum wallet written by one of the Ethereum co-founders. They can't secure it. Like your chances are pretty low. But Bitcoin supported multi-sig since BIP 16 for many years, and you can use a bunch of different hardware wallets. It just works. And it's highly available. Bitcoin has almost never gone down. Put the almost in parentheses because some people may be familiar with an upgrade from a database called RocksDB to LevelDB in 2012 that caused a momentary reorg in downtime. But effectively, Bitcoin has never gone down. It has a culture around it that's like, it's not move fast and break things, it's move slow and never introduce bugs. And so it's credible that this will probably continue. And that goes back to it being a massive open source project. Anything that touches consensus code is reviewed very, very cautiously. And Bitcoin is really innovative. There's a kind of like a school of thought right now that says Bitcoin isn't innovative because all of cryptography is decades old. And that is true. It also created the first time we've ever had digital scarcity. And that's an amazing thing. Previously, you just could not do this because anything that's been sent around the internet, can be copied. And Bitcoin solves this. So that really is massively innovative. And then when you get into the details, it's actually really hard. I mean, there aren't that many software engineers who understand the protocol, who can implement it. You have things like the peer-to-peer gossip layer. You have the math behind the digital signature algorithm. There's a lot that goes into it. It's not easy. I've taught developers Bitcoin protocol in a number cities. And it's a cool thing. I recommend if you know how to code, you should learn a bit how it works, but it's not easy. One of the cool things that Bitcoin creates is this censorship resistance, and this happens through the decentralization. So there is no single point of failure, there's nobody to subpoena, there's nobody that is even perceived to be in control. So you can see this in a case like Ethereum. I often use them as a punching bag because it's an easy scapegoat. But there was a rumor that was completely unsubstantiated about 2 years ago that Vitalik Buterin, one of the co-founders and kind of the lead co-founder of Ethereum, was in a car accident. And he was not. But the price of Ethereum tanked because everyone thought that that was true. And that shows you that the market believes that this person has immense control and that the project is this person. Bitcoin is no one person. There's no one to subpoena. There's no one to try to control the network through. And that's a really, really cool thing. So it's the first time you can be your own bank. You can move across the border with $1 million. It can even be in your head and no one knows you have it. That's really, really cool. So it was created to be the best sound money the world has ever seen. And other blockchains can copy some of these things. And you'll see that many of them will copy stuff and make a tweak, but you can't get all of them. And that's what's really, really unique about Bitcoin and how it's truly one of a kind. So with that said, let's talk about what blockchains fundamentally aren't, because a common thing up until at least a couple years ago, and maybe still persisting, is this idea that blockchains are just going to do everything. That they're the solution to every problem we've ever had, that blockchains are great, that they've got a future, that everything's going to be in a blockchain. And it kind of misunderstands what a blockchain is because it's just a data stream. And it's not an efficient or scalable one. One of the key parts about a blockchain is that everybody validates everything. That's sort of the core thing that's different. If you have an account with, say, Bank of America, you don't validate your database, their database. You don't see your holdings are in there. And there's, I'm not saying that you necessarily should. It's just it's a different structure. That's what a blockchain is. So it's inherently not very efficient or scalable because if you bought a cup of coffee in Bitcoin 5 years ago, and then somebody else boots up a full node today, and they want to validate the history to make sure that there's only 21 million coins, that none were ever double spent, that nothing ever moved when it shouldn't have, they have to validate that coffee transaction. They're inherently not flexible. So a fixed protocol is very different from a nimble company that can just change stuff all the time. We even see protocols of companies are difficult. When a big software company says, hey, we're going to change the way we operate, and it's a breaking change, that does create problems, but they can do it. In a cryptographic protocol where everyone's running nodes, it's really inflexible. And for a business use case, this would be a bad thing. If you're building your business and saying we can never make a change, generally you would say, well, that's a limitation. In Bitcoin, it's really good. I hold Bitcoin because I know that the rules will never change, that Bitcoin will only ever have 21 million, and that the way it works is the way it's designed. And I love that about Bitcoin. I don't want to change. Blockchains aren't anonymous. This is a really common misconception. Blockchain's public. Everyone can download the whole thing. That's part of validating it. That's part of how you know that if you receive Bitcoins, they're real and that they follow consensus rules. But it also means it's like a terrible tool to use to buy drugs with. Please don't do that. Use US dollars, they work great. And as a fun fact, your bills already have trace amounts of cocaine on them, so they're perfectly situated. But don't buy drugs. Now there is one important exception to this anonymity bit, which is ring signatures or ZK snarks. Fancy word for zero knowledge, succinct argument of knowledge. But they're ways of saying something is here, you can't see exactly what, so they might obfuscate parts of the transaction, either the amounts, the sender, or both. But even those come with a trade-off as well, because if you're doing something fancy that's hard to validate, a bug could add inflation. So in Bitcoin's case, we don't have as good of privacy, but we have better scalability. These protocols don't scale so well. And then we know for sure that 21 million have that as an absolute guarantee. Blockchains are not easy to use. So private key management is really hard. And this is a feature, but it can also be a bug. So what's neat about Bitcoin is that settlement, once you have a certain number of confirmations, is final. There's no chargebacks, there's no undo. And if you're receiving money, that's really, really fantastic. One of the expressions and jokes that I like about Bitcoin is that it's the currency of enemies. You don't trust somebody, but you receive Bitcoin, and you know it's settled. It's settled. That was a done transaction. So in that use case, it's excellent. On the flip side, if somebody, say, hacks your computer and you have Bitcoin in your computer and they steal it, well, you'd really like to be able to undo that transaction. That would be better in your use case. So private key management is this really tricky thing because you want you and only you to have access to your private keys. We'll see some ways that Bitcoin is better about this than other blockchains, and the big one is really good multi-sig support and hardware wallet integration for that. But still, private key management is a hard thing. There's no risk that like you're going to forget your Bank of America password and then you're going to lose all your money. In the worst case scenario, you show up at the bank, you might have to show multiple forms of ID, you might have to wait some number of days, but they're going to let you back into your account. In the worst case scenario, if you get hit by a bus, your family's going to get access to that account, the money's not going to go away. In Bitcoin, this is not true. If you have a brain wallet in your head and you get hit by a bus, that money's just gone. And so private key management becomes this really, really hard thing of protecting a secret that you and only you have, that you can never lose, that nobody else can get access, and if something happens to you, it's passed on to your family. That's really, really challenging, and it's a good reason why we don't want inherently to put data on a blockchain. If it's that important, if it's that vital, like your money and maybe your ability to, say, send it to another country or flee a country, well, then it's really, really valuable, and you value that. But for ordinary use, that may not be such a great feature where you would want to use a blockchain. And it's not particularly cost effective. This sort of goes back into the scalability part. But the way that we secure blockchains is either through mining or inflation and or transaction fees. These cost money, and they should, but it's not like a panacea. You wouldn't want this. For Bitcoin, these are the right trade-offs. And then another common one is that they're really smart. You often hear the term smart contract. Contracting languages are intentionally dumb, and they kind of should be, because first of all, if you want them to do something, how would they know about a state outside of the Bitcoin network? That's a really complicated thing. Also, you wouldn't want bugs. So if you have like a complex scripting language, say a Turing-complete one, like again, I'll pick on Ethereum, you might have a bug like the DAO, where 1 in 6 Ethereum accounts had money in the DAO, and that contract effectively had a bug that lets you be directly lines out. That's a really bad thing. You want your language to be very simple. So while Bitcoin is complicated and that you have to understand how to read the code to do it, you're basically just sending money. That's pretty much all it is. You can do some time locking, you can do multi-sig, but pretty much you're just sending and receiving money. So it's as simple as could be for such a complicated thing. And then we get to simple. So there's a common expression in computer security that complexity is the enemy of security. We see this all the time. Complex system is harder to run, more likely to have a bug, and if that's doing something important, like storing money, well, that's a really, really bad thing. It's good that Bitcoin is as simple as can be, but no simpler. So the joke in this is adding blockchain is far more likely to create a problem than to solve it. Now, if blockchain is optimal trade-offs for what you want, like a scarce money, then it's worth it. And these sacrifices are pretty awesome because they get us something we've never had before. But it doesn't mean we want to go to blockchain. So here's why the copycats can't succeed. Money is a winner-take-all. We have one money in every country because we have one government in every country that says we must use this money. But we don't have two monies in any country, except when their money is so broken that they also use, say, the US dollar as a backup. Where they have one they have to use and one they want to use. But ultimately, in a free market, only one money wins. So it's not really realistic that we're going to have multiple of them. And a copy is going to be inferior to Bitcoin in nearly every dimension that makes it valuable. One of the weird things about money is it's this strange game. You want to have the money that other people want. It doesn't even have to be ideological, just from a pure profit motive. You want to have what you think other people are going to want. So everyone's looking around at the same environment. We're all seeing the same world, and we're all saying, what are you going to want in 6 months or 6 years? I want to get it before you. And you're doing the same thing to me, and everyone else is doing the same thing. And a copy is really, really hard to get everyone to agree on. You might be able to get some early adopters to say, hey, there's this brand new money. I just printed it. I have a ton of it. And I think it's going to go up, and I'm going to be able to sell it. And somebody might buy that saying, hey, I think it's going to go up a little bit more, and I want to get in before. But at some point, no one else is going to show up to buy that. And And so in the very beginning, there's an incentive to create copies. But the Schelling point is what we all agree on. So you have an incentive to create infinite monies. We see this in cryptocurrency. There's, depending on the stat, 2,000 of them that people want to buy. But there's no value in them inherently. That you have to get people to come buy them. And at some point, you're not going to be able to get people to play this early adopter game. One of the really big ones is centralization. The reason Bitcoin was invented was to get rid of trusted third parties. And these systems tend towards centralization. Bitcoin is arguably more centralized than we would want it to be. But it's still by far the most decentralized. And over time, that will show itself to be a better and better thing. So if you look at, again, Ethereum, it's just an easy punching bag. And so many of the Ethereum nodes are run by Infura. Infura is backed by Consensus, which is basically the foundation that supports Ethereum. And that's crazy. We could get to a world where if you're doing an Ethereum transaction, you're just querying a SQL database run by Infura. It's very hard to run an Ethereum node. You have like leading blockchain APIs, like BlockCypher, have multi-week downtime because they have struggled so hard to run Ethereum. They don't struggle to run a Bitcoin node. That's easy. It doesn't have downtime. But they do have that problem with Ethereum. And then you have market capitalization. That's where you see a lot of this stuff. You go to like a coinmarketcap.com and you see, oh my God, there's all these billion-dollar currencies. They must be valuable. It's such a misleading metric. It is surprising that we have as many with as much trading volume as we do. But there's not an order book to buy the entire currency for that $1 billion. There's a spot price to buy one coin. And if you look at one coin, potentially one unit of one coin, and if you look at the trading volume, the Bitcoin's dominance is through the roof. Everybody's trading Bitcoin. They are trading some of these altcoins, but it's a tiny market trading. And a good example of this with this is that I can create a coin tomorrow, call it Michael Coin, don't buy it, it would be terrible. I can sell 1 unit to Baroque for $10, and I can create 1 billion of these, and I'd say I have $10 billion market cap. And that's pretty straightforward with what we see happening with a bunch of these altcoins. And maybe I paid for $1,000 to buy it. So at best, the clones can fail alongside Bitcoin, but without some huge technological breakthrough, it's really unlikely they could ever. So you should know that's the game you're playing if you're looking at these altcoins. So I often see this as the path of the new player. This has been amazing to watch happen cycle over cycle, and it kind of blows my mind that it still happens. So the first thing people ask when they learn about Bitcoin is, can I mine it on my computer? And if you're new to Bitcoin, the answer is absolutely not. You will not mine any Bitcoin like this. Don't do it. And because now we all use, the miners use very expensive mining equipment called ASICs. It's an application-specific integrated circuit. It just does SHA-256 really, really well. And so people say, oh, should I buy mining equipment? That seems like a better way to get Bitcoin. And the answer to that question is definitely not. You have to have a huge competitive advantage in sourcing this equipment. You want to get it as soon as possible because newer equipment brings online more competitors for blocks. And as we remember before, the more people trying to mine blocks, you do not produce more Bitcoin blocks. So it's just a harder competition for the same number of blocks. So the key in Bitcoin mining equipment is to get it first, when it's the brand new equipment that's more efficient, and that's when you get the best returns. Over time, as you keep running that equipment, you're getting far less Bitcoin, at least historically, that's how it's always worked. So the answer to should I buy mining equipment is almost always no, unless you're really an expert in sourcing hardware, super cheap electricity, sysadmin work, and if you were those things, you definitely know it already, and you probably live in that. And then they say, okay, well, I can't mine it, and I can't buy mining equipment. How about this altcoin? Is it going to be the next Bitcoin? And we talked about that a bit, about that tends to be a bad bet. And then we had platforms like you can create your own network. You don't need cryptographers, you don't need security, you just need a PowerPoint and an address to receive funds on. And I haven't gotten into the details on this one, but suffice to say, there's lots of hilarious stories of people raising millions of dollars and producing nothing, which is somewhat to be expected. I mean, we even see this in startups. Raising too much money is actually not a good thing, as much as that seems really hard to believe. When I did the Accelerator Y Combinator, they used to call this the empty wants to raise a ton of money, because raising a ton of money sounds great. It's hard to imagine that's a problem. But it becomes really hard to deploy it effectively. And when you raise too much money, it becomes hard to ever raise money again, because you need to raise more money at a higher price for investors to be willing to do that. So you kind of put yourself in this weird position. If you start out by raising $100 million, you're probably never going to be able to raise money again, so you have to get everything right that first time. And remember that even if you're doing a token, you might have some of these difficulties of having a fixed protocol. Depends how your token works, of course. And then there's this moment where everyone says, hey, wait a minute, why are these alter tokens worth anything? Oh, I can use these to acquire more Bitcoin. So that's a fun moment to see when somebody switches back, where they've been perhaps trading these things as a way to acquire more Bitcoin. But sometimes you win, sometimes you lose. When you win, you pay taxes. A lot of these coins are really insecure, so maybe that wallet you downloaded was actually malware, someone's stealing coins, and you say, maybe I should just hold on to my Bitcoin. And this is the path that's been pretty amazing to watch. So, in conclusion, be very wary of those that say, I'm new to Bitcoin and I'm here to fix it, especially when they ask for yours. So here are a bunch of resources that I recommend for learning more about Bitcoin. I think each one of these is fantastic. Well, maybe not all of you on Twitter, but you're certainly welcome to tweet out my opinions on Bitcoin. But a whole bunch of different resources. And again, these are all online at bit.ly/BTC Maximalism. So that's the official part, but the Q&A is the best part, so we can jump into that. Yes, sir?
As far as, like, you say, like, the code, it's obviously like website HTML, create a new website about that code, whereas with Bitcoin, of course, you don't want some crypto money, like copying code, you want to keep it scarce, all of that as far as the code. But if you originally started, what was a big moment for Bitcoin that like started and everyone's been open source working on since then, not changing it?
Yeah. So the question is about the inception of Bitcoin, and it's a weird thing, because this pseudonym named Satoshi Nakamoto could be a person or a group of people. They self-identified as he, so believe it to be male, but we really know nothing about this pseudonym. Created it anonymously and released a white paper and some software, and had some accounts on some forums, like the Bitcoin Talk forum, and disappeared early in Bitcoin's history and said that he was moving on to work on other things. And we never heard from him. So it's really bizarre. It's like very unusual. Satoshi, their coins, or his coins, I guess I should say, are worth over $1 billion. So I don't know that we've ever had an anonymous billionaire in the world, closer to 10.
Code Maroon test. This is the monthly test of the Code Maroon system. No action required at this time. This is only a test. 12:30 p.m.
I guess we're not supposed to talk about Satoshi. But currently a multi-billionaire, and if Bitcoin's really successful, it could be the world's first trillionaire, and nobody knows who they are. Another thing that's really bizarre about it is, to the best of our knowledge, we don't know who owns each Bitcoin, but we can assume that in the beginning days, there were long periods of time where Satoshi was the only miner. There were a couple of other people that came on to the scene, like Hal Finney, who was an early miner. And there's been all kinds of statistical analysis done to be like, we think these are Satoshi's coins. I think I can talk over that. So we don't know for sure, but it seems very likely that they never spent a single Bitcoin. So, and just picture that there's somebody out there with billions of dollars of Bitcoin, and it's never been spent, or maybe they were previously wealthy before. My speculation is that they're dead, because who has that kind of self-restraint? It's also possible that they never stored the private keys of that money. At the time, they were mining blocks of Bitcoin 50 at a time, but there was no price for Bitcoin. I mean, remember, it was much later that someone paid 10,000 Bitcoin for a pizza. So, like, would you even bother backing up your hard drive and saving a private key with 50 Bitcoin on it? Maybe you wouldn't. We could debate forever who is Satoshi, or that's super bizarre. But to the practical parts of how Bitcoin was released, so there was this Bitcoin software client called Bitcoin Core. It was open source, and Satoshi was originally the only, he wrote it, he was the only person working on it. And then eventually he handed it off to Gavin Andresen, original Bitcoin core client was like written by somebody who's not good at writing software. And so there were all kinds of like little things that we recognize now as obviously not ideal, many of which have been cleaned up. So things like the way, well, the original implementation paid directly to a public key, and now we pay to the hash of a public key, which has some security benefits. And actually, I think Satoshi implemented that one. That was like an upgrade. But version 1 was not as good and added support for paying to the hash of public key. But then, on a more practical level, they were using a software library called OpenSSL, and the way they were storing those the public keys was uncompressed. And that's just sort of like a rookie move. You wouldn't want to compress your public key because you save space. So in v0.7, I think it was, Bitcoin core protocol, they switched to compressing the public keys. So there was a lot of little things like that. It just keeps getting like iteratively better. The original version of Bitcoin core software had a single file, main.cpp, that was 40,000 lines of code. It's very, very hard to read or maintain or reason about. That's a very bad software practice. Don't do that. And over time, people have factored out parts of that code and reorganized it in a way that's more usable. So Satoshi handed us this thing that was imperfect, but again, incredibly impressive, and got all the core parts right. And the parts that there were room for improvement, like compressing public keys, that happened a long time ago. So from a software perspective, it's a little bit weird. This was probably more of a cryptography person than a software engineer person. But it got us where we need to be, and now there's hundreds of people working on Bitcoin Core's code base, and cleaning it up and making it really nice. The other part of that was releasing the coins. So Bitcoin is unusual. It's sometimes called like an immaculate conception. It's the most fair way you could distribute a new money, because think through that problem. Like somebody invents a newer, better form of money. What's the optimal way to give it out? That's a really hard problem. It's not practical that they're going to like knock on every single person's doorstep and say, hey, would you generate a public-private key pair, and I'm going to give you 1 Bitcoin, and it's going to be the most fair system. It's not realistic, and those people wouldn't value Bitcoin at all, because they wouldn't have bought into it. So a much more realistic system is to say, hey, we're just going to have this open to mining. Anyone can come and mine it. They can mine it on their home computer. Those who choose to spend the electrical resources, which were very little back then, and have the technical know-how, and have heard of it, well, they get to run Bitcoin first. And some people say that's unfair, because like, were you on a cryptography email list in 2010? Well, then you don't get to mine Bitcoin. But anyone could have been on that list. It was free. And those are the people who are most capable of understanding and running the software. And over time, software got GUIs, and we got GUIs, so we didn't have to get a command line. And there is no way to have such a beautiful, immaculate conception of a coin ever. That was sort of a one-time thing when the window is closed. The one thing I will say is a valid criticism of Bitcoin is that there's this one entity controlling roughly 8% of the coins. That maybe they lost the keys, maybe they died, but maybe they're out there. I don't like that threat sitting on Bitcoin. I can prove like one thing about Bitcoin. Satoshi would have like publicly burned their keys, or more realistically sent their coins to a burn address is the way to accomplish that. But I think in practice, this person is probably dead.
You said that he's never spent his keys.
Never
So
spent
you know that because you can always trace the entire transaction history of every coin.
Yeah, so I would say no with an asterisk. Like very, very, very confident. We can't be 100% sure. Like
Right.
maybe they mined some coins and they saved them, on these set of keys, and maybe they mined some other coins and saved on those set of keys, and maybe some of these ones that people thought were half-pennies or something were actually Satoshis, and maybe he was able to spend them. But to nobody's knowledge, has Satoshi ever spent Bitcoin. The ones that are suspected to be his have never been.
And how do you know the size and the number of coins?
So again, it's just, there's a whole period of time where he was the only miner on the network. So we're just looking at 50 blocks every 10 minutes, these blocks for these periods of time. We're almost sure we're his. Again, we can't be 100% sure. There's no registry of miners. One of the really cool things about Bitcoin, anyone can jump in and participate at any time. There's no application. There's no even saying who you are. There is a thing in what's called the Coinbase message, which is a message in the first transaction of every Bitcoin block, where you can embed optional data. So mostly that's a mining pool saying like mined by him. It will just self-proclaim it. Again, it's not provable. It could be somebody else claiming it. There's reasons why you wouldn't do that. It could be anything. Luke Jr. runs a mining pool and he puts Bible quotes in the Coinbase message. He's Catholic and he wants to do that. So we can't really know. But it's pretty likely, like nobody else would mind Bitcoin, and it hasn't.
So obviously the U.S. dollar isn't perfect, but inflation does incentivize consumer spending. And so if Bitcoin's like deflationary in nature, wouldn't people more elect to just hold on to it more as like a speculative asset rather than spending it as like a medium of exchange?
So the question is asking about Bitcoin being deflationary in nature, and small asterisks there. We still do get new Bitcoin every year. It's just the amount of new Bitcoin falls, and so that's something that's like mind-blowingly unusual. So the supply still is increasing, at least until the year 2140. But we can think of it as deflationary because it's so different from other currencies. So is a deflationary currency a bad thing because people will hold on to the money, expecting it to become more valuable instead of spending it? And so I guess I would throw the question back on you and say, why is consumption inherently a Bitcoin? Because we know that there's savings, investment, and consumption, and there are direct odds. You can either be investing in something or you can be consuming. And why is it better for society that we should be consuming instead of investing?
Well, I guess like consuming it is good for the economy. And if you're just like holding on to it and hoarding it, kind of like a digital gold, then it would just be acting as digital gold rather than digital money. So I don't know. I just think that like consumer spending is important, and so people are thinking that it's just going to go up in the future. They're not going to want to spend it.
Yeah. So as far as the not going to want to spend it, there is an incentive for that. I've never spent Bitcoin, and I like my Bitcoin works great offline in a safe deposit box and not touching it. But the reality of life is that at some point humans need to spend money because we all have a time preference. We're all going to die one day, and you're probably going to want to use some of that money for some reason. So even if a currency has less incentive to spend, you still will spend. You'll just be more judicious about it. And I don't see that as a bad thing for society. We should have a society where people really want to invest capital, make the future a better place. That's probably better than a society where every year you get the latest fashion trend in disposable clothing. Now, maybe some consumption is really good. Maybe you want to prioritize that consumption. But ultimately, that's a person's choice. And again, with money, it's the Schelling point game. We're all looking around saying, what's everyone else going to do? And I'm listening to your question as saying, okay, it sounds like this Bitcoin thing is going to do really, really well. What should I do in that situation? So you make your own decision. I'm not telling anyone they should lie, but it informs my decision of what I want to do with my Bitcoin.
Yeah.
And so, you can look at that and say that's bad, or you can look at that and say, oh, well, if that's what I think is going to happen in the world, maybe I should own some of this.
Well, then I guess like what I'm asking is, would Bitcoin be more of like a digital gold rather than digital money that would be like replacing the dollar?
So that's the big question. Is Bitcoin going to replace gold or is it going to replace the dollar? And I don't know. I'd love to see Bitcoin replace the dollar. That would be amazing. The path to replacing gold seems pretty straightforward. Because if we go back to those properties of money, portable, durable, divisible, scarce, recognizable, and fungible, Bitcoin crushes on almost every single one. So it seems it crushes gold on almost every single one. So it seems obviously better than gold, and it would seem that in the long term it would obviously be better. Now there are trade-offs as stores of value. Bitcoin's like complicated. You can mess up. This will get better over time, but like gold is pretty simple. It's rock. You hide it somewhere. When you want to use it, you get it back. Like humans have been doing this for a really long time. There's no manual, there's no software update, there's no malware, there's no forgetting your password to your gold. Maybe you forgot the password to your safe, but you can drill it. Like gold works. It's very proven technology. But if you look at the border of, one of the crazy things about Bitcoin, the cheapest place in the world to buy Bitcoin right now. Does anyone know what country it is?
Afghanistan?
Ooh, it might be very cheap there, but it's not the one I'm thinking of. Colombia. Why would Colombia have really cheap Bitcoin? Because if you live in Venezuela and you're trying to escape a government and you carry your life savings across the border with you with gold, well, they have metal detectors. That's not going to work out very well. But if you carry your life savings in your head in Bitcoin, well, how could they know that there's Bitcoin in your head? It's just not really, there's no Bitcoin detector that they can put you through. And as much as you might love Bitcoin, you probably just moved across the border with nothing but the clothes on your back and you're trying to restart your life. You need to sell that Bitcoin to pay for real things. And so when you have a bunch of people showing up in Colombia selling Bitcoin, then you have to have a lot of buyers to make up for that, and the price is going to fall. And so the price falls. It's not cheap. I'm not saying get on a plane and go to Colombia and buy Bitcoin, but it's a couple % cheaper And so Bitcoin has these like amazing properties that gold doesn't have. So there's trade-offs about what that will look like. Certainly, if you ask somebody of y'all's generation, Bitcoin seems a lot better than gold. That just like kind of makes sense. If you ask like your grandparents, I'm sure they would say the opposite. So I think there's a generational element of Bitcoin. But yeah, so will it replace gold? I mean, that's my bet. It seems like it's just better. It's way more portable, way more divisible. It has this cool censorship resistance property. You can back it up. We didn't talk that much about Bitcoin multisig, but you can do like a 3 of 5 transaction with your Bitcoin. So you can lose 2 pieces and still keep your Bitcoin. There's no way to do something like that with gold, where somebody found this piece, it's worthless, but if they find 3 of them, they get all your gold. You could do some sort of safe with 3 keys, and then you have the keys in different places, but you can just drill the safe. That's ultimately a big security feature. Bitcoin is truly more securable than anything we've ever seen. That's still kind of cutting edge. Hardware wallets do have support for multisig, but it's not as good as we'd like to be, and they use different standards. I think over time we're going to see user interface improve on this, and people will understand that it's just a thing. You have like 5 things, maybe they're crypto steals, maybe they're treasures and cold cards, and ledgers. Those are hardware wallet manufacturers. And you have these 5 things, and any 3 of them get your Bitcoin. And you can even do more complicated things with, there's a protocol called Slip39 that's an implementation of Shamir's secret sharing scheme, and so you can have groups within your groups. So you can have like, the transaction needs like one of your immediate family members to sign, and then like, one of your close family friends to sign, and then one of like your accountant or lawyer or somebody, rabbi, whatever it is for you. You can get crazy creative with it, and this is just not a thing you can do with gold. So that's really, really neat. As far as going from gold to attacking the US dollar, I would love to see that. That would be amazing. I'm not going to say that would happen, but I am thinking through like what's going to happen in the future. And it seems pretty obvious that every country is printing money somewhat uncontrollably. It seems pretty obvious that they're not going to be able to rein in their spending to combat that. It seems pretty obvious that if you look at countries that are further along in this process, the solution to that is to print more money. And at some point, if there's another asset that you can go to that is a harder money, that is more scarce, people will do that. And at some point, that house of cards stops working. So that would be really amazing to see. Governments are really powerful. They've been printing money for a really long time. Maybe they can get away with it for a really long time. I don't know. But if you're just betting that Bitcoin's going to replace gold, there's roughly $9 trillion worth of gold. Bitcoin has so much room to grow just to compete with gold. It's so in its infancy relative to gold. But if it competes with gold, then it could make a run for something much bigger. That would be great. Yes.
All right, so in recent months, the anonymous European quant Plan B has become famous for its stock-to-flow model, which suggests that scarcity drives value, going back to your previous point. With the next halving coming up in May 2020, what are your personal opinions regarding this model? Do you believe this model has validity? And then lastly, if so, why does the market not reflect this model in the price yet?
Yeah, so the question's about Plan B. He's, I think he's at 100 trillion on Twitter, or at 100 trillion USD on Twitter. And it's a graph that shows stock to flow. So stock is like the amount of gold out there, and flow is the amount of new gold that comes online. And remember when we talked about gold, if the price of gold goes up, there's more incentive to mine gold, so you can have more flow coming online in a given year, and the reverse if the price goes down. And Bitcoin is this unusual asset that has a fixed supply that will only ever be 21 million. So you can see Bitcoin's price versus its stock to flow over time. And that's the graph that he puts together. Because remember, when Bitcoin first came out, there were no Bitcoins, and 50 of them were coming out every 10 minutes, every block. And then 25, and now 12 and a half, and like he said, in May 2020, it's 56 and a quarter. So we see that Bitcoin's emission schedule, percentage-wise, like is this a step function, stepping down. Which, again, if I were to design Bitcoin perfectly, I would want it to be like smoother. It's weird that we have these supply shocks every 4 years, but it's still really good. So anyway, you can see that as Bitcoin gets more scarce, its price goes up, and this is correlated really well. And what's also neat is on the same graph, I wish I could pull it up, he also shows gold, and you can See, gold fits this same model of stock to flow versus price. And then he also shows some other precious metals, like I think palladium. And so it's neat to see this model sure has a high R squared. Like you look at it, you're like, that seems really, really right. It certainly could be. I would love for it to be. You know, I guess only time will tell on that one. But it's a question of why isn't it priced in? You know, in a perfect market, all future information is priced in today. So if you know the happening is happening May 2020, shouldn't you buy some Bitcoin in April 2020? If everyone knows, you know, is thinking everyone else is going to buy in April 2020, when you buy in March, and then, well, you want to front run that again in February, and that would true January, and that would be back here in November. And there's an argument that's already happening. You know, this is that same game. Everyone's looking at currency, and they're looking around at what everyone else is looking at. We're all seeing the same information. We're all saying, who's going to move, and I want to move first, but I want to be right when I move first. So that's possible. You can't know. What's unique about Bitcoin is you don't see a lot of Bitcoin-denominated contracts. So in other markets where people are speculating on inflation and information moves the price instantly, you have things like mortgages. So people hold mortgages that are dollar-denominated, and they have to pay that every month. And so an interest rate move affects people's decision-making, like maybe they refinance. In Bitcoin, we don't really have this. It's really dangerous to take a short position on Bitcoin. It's really dangerous to loan your Bitcoin out to somebody if you wanted to, because there's so much counterparty risk. You don't get a lot of interest when you do this. So effectively, I think the market's just not perfect. And so my hunch is that the market hasn't priced this in. And the second order thing is Bitcoin's price tends to be correlated. I should just say it's a separate thing. Price is like a crazy thing. Do your own research. I don't recommend anybody hold any Bitcoin. I love Bitcoin, but you make your own decisions. So as the background piece for that. But Bitcoin price tends to be correlated to news interest. You know, when Bitcoin is on the front page of the Wall Street Journal, when it's being talked about on national news, that tends to be when everyone's getting FOMO, when everybody wants to have some Bitcoin. They also want to put blockchain on everything. And that tends to work that way in hype cycles. So Bitcoin has been pronounced dead. There's like literally web pages that document this, all the people that pronounce Bitcoin dead over the years, which is really, really funny. Bitcoin is, every week it comes out that Bitcoin is dead, which is pretty amazing because Bitcoin has worked for so long. And it sort of tends to follow this hype cycle thing, where it's amazingly exciting, Bitcoin's at all-time highs, it's this revolutionary technology, it's so exciting, and then it crashes down to a price that is still very, very high. I mean, Bitcoin today is at roughly $7,800, something like that. I haven't checked in the last few days.
Crash.
7,000?
Yeah.
There we go. See, the price of Bitcoin moves are crazy. And you could say, like, oh my God, this thing in a couple days crashed, this huge price, Bitcoin is dead. And I look at Bitcoin and I'm like, how much are we up over the year? How much are we up over 2 years, over 3 years, over 4 years? And Bitcoin's price has been phenomenal. It's incredibly volatile. Bitcoin's very, very risky. I could not tell you what it's going to do tomorrow. But the amazing part about it is that people pronounce it dead, it crashes down to prices that are still very, very high by historical standards, and then in its next rally it shoots up. It crashes down to a new floor that's very, very high by historical standards. That's what it's done in the past. And these have corresponded to these hype cycles. So I can't say this is going to happen, but it seems to me that in May 2020, when it becomes more mainstream known that Bitcoin is now the scarcest commodity in human history, that that's happened, and it's only going to become more scarce, I think that's going to be an incredible news cycle. And all these people who heard that Bitcoin died at 3,000 are going to say, wait a minute, this thing is still alive and kicking and doing great, and that's going to feed the next round of this whole cycle we've seen. That's my bet. I could be wrong.
From a policy perspective, how likely do you think it is that the government will try to find some way to regulate Bitcoin, or just make their own cryptocurrency?
Yeah, so I think the government makes, so the question is, how likely is it that Bitcoin will be regulated by the government, or the government will make its own cryptocurrency? And there are two, I think the two different things, so one at a time. So if the government creates its own cryptocurrency, I think it's going to be amazing for Bitcoin. Because there's no way that currency is going to be scarce. They're just going to put US dollars on a blockchain. They're obviously going to be able to censor them and freeze them. There's no way the government's going to issue a US dollar coin and say, like, oh shoot, people were using it for terrorist financing and child pornography and buying drugs on the internet, but we can't do anything about it. It's a blockchain. They're definitely going to freeze those funds, and they're going to have control. People are going to, and they're going to print a ton of them because they're dollars, you know, they'd be dollar denominated. So So they'd be telling all these people, hey, download a cryptocurrency wallet, use private keys, here's our new money, but by the way, this money, we inflate the supply like crazy, we monitor all your transactions, we require your ID, and we freeze your funds. And what's the killer feature of that app going to be? Selling that shitcoin for Bitcoin. It's probably going to be built in. Someone will make their own version. So I can't wait for government cryptocurrencies. They're not going to resemble any of Bitcoin's censorship resistance. And it's going to make it so obvious to people. And we kind of saw that with Libra a little bit. When Libra came out, you watch like major commentators talk about it and try to understand what is this Libra thing, why does it work, how does it have value, how does it work, why does it have value, what's the point? And you watch them walk through this conclusion very quickly to be like, well, this isn't censorship resistant, it isn't scarce, I don't understand, why don't you do Bitcoin instead? And it was like amazing to see mainstream commentators have this viewpoint so quickly in a matter of weeks, sometimes days. So I think the same thing will happen if the government launches its own blockchain, and they have good reason to potentially want to do that because they have to deal with the problem of printing money and counterfeits. So it's about 1 in 1,000 bills is counterfeit, and that's small enough that it's not like really a problem, but it's still not ideal. Blockchain doesn't have counterfeits, so they can solve that problem, and they do have to pay to print and retire money all the time. So they have incentive. Oh, and the digital transactions are trackable. If I give you a $10 bill and you give it to somebody else and they give it to somebody else, very hard for the government to track that. So government has a lot of incentives to want to have their own private blockchain, or permissioned blockchain, we should call it, and that would be great for Bitcoin if it were. But the second question, which is tied to that, is the regulation. What if they decide to regulate Bitcoin? And that actually is one of my fears of Bitcoin. A lot of people will say, like, well, you can't regulate the protocol, and that's true. You can't regulate the protocol. And we can see some examples of regulation in other monies. So when Argentina had capital controls, which they ended under the Macri administration a couple of years ago, they still do have very high inflation. They had very high inflation, they had capital controls, and people's solution was to use physical US dollars. That's why that statistic that there's more $100 bills than $20 bills is true, and you can look it up on this website. It seems hard to imagine. Those $100 bills don't live in the US, and they're not being used day to day to buy things. They're being used to store value. So depending on which economist you trust, Argentinians were storing under their mattresses and in safe deposit boxes between 40 to 60 billion US dollars in physical bills. Because if there's another haircut at the bank, they can take from your checking account, but they don't go into your safe deposit box and like count up your bills and take a certain percentage of it. Obviously, there's all kinds of risks when you're storing physical money that way. Fire, flood, water, sprinklers, theft. It's not a perfect thing, but $40 to $60 billion worth of people were deciding to do $40 to $60 billion that this was the best way for them to store their value. What's so crazy about this in Argentina is that it was also illegal. You're not allowed to use dollars. Things had to be priced in the local currency, so like people would go to buy a house and they'd have to convert all of their money to local pesos, buy the house, and then convert it all back to dollars. It's incredibly inefficient. You can see this in autos and other areas. The government could have cracked down harder on dollars, and they did in some ways. So at their borders, they didn't have drug-sniffing dogs. They had dollar-sniffing dogs, which is fairly hilarious, but that's the world you end up with capital controls. And so they could have taken more steps to do this. They could have done sting operations, gone into people's homes and said, we know you have dollars, and found the dollars and sent them to jail. And that is possible. At some point, the government starts to look like a tyrant when they do that. They do fear some sort of uprising. They don't want to look that bad. But you could see something much more subtle, like maybe you just have really onerous KYC requirements that know your customer, if you don't know that term, that make it really, really hard for customers who want to sign up on exchanges, so on the on-ramps and off-ramps to US dollars. Maybe you have like really difficult tax reporting, so every time you do a transaction, it's incredibly complicated. Maybe you just decide to tax it as ordinary income and not get a capital gains stream. And there's all kinds of ways the government could effectively make it really, really hard. Or in an extreme example, they could just decide like tomorrow this is illegal. In practice, very unlikely. The IRS has already ruled it's property. They collect taxes on it. When the US government took Ross Ulbricht's Bitcoin, the guy who ran Silk Road, they sold it at auction. that was hugely beneficial in terms of like giving our stance on what the government thinks of Bitcoin. When the government like seizes cocaine from a drug dealer, they don't sell it at auction. They destroy it. They do sell a motorcycle, they sell a car, they sell jewels. In this case, they sold the Bitcoin. So they've got all these signs that say like, hey, this is property, this is how you pay taxes on it. When we see some that was ill-gotten, we sell it. So we take dollars for it. You have lots of exchanges with money transmitter licenses, bit licenses that transact in it. So it's impossible to say what the government will do tomorrow, but it seems to be okay. And one of the things that makes me very optimistic is we've seen the fork of all these different cryptocurrencies. So you have coins that are for payments, you have coins that are for ICOs, you have coins that are for file sharing and every possible use case. And so it's sort of become clear that Bitcoin is about storing value. And the government sort of views it as like this niche gold bug weird thing that they're like, whatever, as long as you pay your taxes on it, we'll treat it like property, which is weird and not ideal. It would be better if it was treated like currency. But as long as you do that, you're fine. And they've changed their stance, but they move pretty slowly. They're also liking getting that revenue, so they're probably happy with that situation. So for now, that seems like pretty okay. But it could change, and that would be bad for Bitcoin. In the short term. It wouldn't kill Bitcoin, but it wouldn't be good for Bitcoin.
I just want to say, we are about to be out of time, but Michael can stay for some more Q&A if you guys want, but if anyone has to leave at 1 o'clock, you can leave, that's fine.
And a shameless plug before anyone leaves. So I run the Bitcoin Club with
Yes, that's
Farouk
Matthew, by the way.
and Judith. Hey.
Yeah.
And so if anyone's interested in joining or talking about like deflationary versus inflationary currency, we need to make it a lot more fun and have more people. So please just come up to me and ask, and I'll get you added.
So, yeah, so people, we have to leave, but if anyone wants to stay, Michael.
We have the room. I'm happy to chat. I love talking about
Yeah.
Bitcoin. But if anyone has to go to class or something, totally understand.
How did we come to a number of like 21 million of Bitcoins? What was the reason of choosing 21?
Pulled out of thin air. So the question is why 21 million? It's a totally random choice that Toshi made, but it actually doesn't matter. All you care about is that it's divisible enough. And really you should be thinking in terms of like what percentage of the Bitcoin do I own? Now it's a weird thing because you own like 0.000 whatever percent. We don't usually think in that way, but you want to be thinking what fraction of the money do I own? The actual unit or denomination. A Satoshi is 100 millionth of a Bitcoin. I like to think in Satoshis. But there are ways if you use like the Lightning Network where you could denominate things in thousandths of a Satoshi. So we have the ability to pay for like whatever super precise amount we want. It's just like what piece of the total pie. And that's where money is different than say a productive asset like a stock. It's something like a stock. Well, I think that's that can't do it out. Really, the important part is it's just what percent of ownership.
So when Facebook announced that they're going to work on the Libra currency, and each of like the great banks and every investment banks were putting together, they're working on something. But recently, the idea is going down the line. People are the banks are moving away with Facebook, and so what was the reason people are moving away from this trend?
Yeah, so the question is why did the banks pull out of Libra and what happened? Basically, I think it was a bad idea. You get when the government comes after you for doing something wrong in currency, they're not like, hey, we don't love this thing. It'd be nice if you did something else. They say you're helping terrorists, child pornographers, and drug dealers. So if you're like the CEO of a company, those are the worst things you want to be associated with. And usually they come with very stiff penalties. If you are these big companies all have lawyers and follow the rules, but unlicensed money transmission is a jailable offense. So just money transmitting without a license, not that what you were doing with that money was necessarily bad. You might have been doing the right thing. You might have been helping poor people get cheaper prices on remittances. But if you don't have a money transmitter license, you go to jail for that. It's a federal crime. So I think that these companies kind of signed on to we're into blockchain and innovation, and Facebook's a big reputable company. Sure, we'll put our name on this list. And then as soon as they saw that they were going to get dragged in front of the House Financial Services Committee and asked what their involvement was in terrorism and child pornography and drug dealing, they were just like, we don't want anything to do with this. even when you look at that payments use case, credit cards companies do make a lot of money, but like Venmo doesn't make any money. So it's not clear like what the upside was for them. And companies of that scale, they're not usually the innovators. You know, they just want to buy the successful startup at a high price and sort of like walk in their money. That's usually what the Fortune 500 companies are in the innovation business of doing. So this wasn't really in their like primary direct wheelhouse. A lot of these companies have like, innovation departments, and they want to show that they're innovative and they're doing pilots. That's why you'll see like a lot of blockchain stuff has big names associated with it, and then you're like, what are you using this product for? They don't, but they have an innovation lab. The head of innovation has a huge salary. It's a super cush job to be like the head of innovation of a Fortune 500 company. But at some point, you got to go to your boss and say like, look at what I did. You know, thanks for all this money, and also I want a bigger budget next year. And so if you did a pilot on the, you know, name your permission blockchain here, you want to demonstrate that you did something. But it's very cheap to put out a press release. It's very hard to change your business practice. There's not a use case for it.
You talked about how reputation and scalable Bitcoin is. Can you talk more about the social scalability?
Yeah. So I just want to make sure I understood the question. You want to know about Bitcoin social scalability?
Yeah.
So one of the things that's really weird about Bitcoin is there's probably like 5,000 people in the world that can implement the Bitcoin protocol. There are more people that could learn Bitcoin, but there's probably like 5,000 that if tomorrow all of civilization's information were wiped out and they're like, all right, sit in front of a computer and implement the Bitcoin protocol, there's probably like 5,000 of those people. Because it combines some cryptography knowledge, some software engineering knowledge, some economics understanding. You have to be like into those things. That's just obscure and an intersection that you don't get a lot of. And so as a result, you know, like if I talk to, sometimes I'll be talking to Bitcoin core devs about stuff they're working on, and like it's so out there in the weeds, you know, debates about different signature schemes or, you know, sig hash no input for Lightning Network or, you know, taproot versus musig or that kind of thing. And so the reality is like all this stuff kind of diffuses down. You have like people that are really into it that talk about it. People that maybe put some of that content into like newsletters, or they tweet about it, or it's on Reddit, or they write blog posts, or they do meetups like this. Podcasts have become really popular in Bitcoin, conferences, and so information kind of ripples out. That's a terrible choice of word. Information makes its way out, and it's always funny to me to hear like people that are relatively new to the space that are non-technical talk about what interests them in Bitcoin. Because some of these things like totally make it to you know, Joe Bitcoiner who's like, yeah, it's scarce. That's one of the things you always hear, it's scarce. And then you start to hear questions like, well, is it a problem that there's only 21 million of these? Like, how would we ever use them? And you know, Joe Bitcoiner, well, you can divide them up into lots of parts. And people kind of get that. But then, you know, is the witness discount appropriate for incentivizing multi-sig transactions? Like that, you know, the percentage of people in Bitcoin that can talk on that is so much smaller. So that is kind of a problem, but parallel to that would be like, think of how many people are using the internet every day. Do they understand TCP/IP? You know, do they know whether it's an IPv4 or an IPv6 address they're connecting to? Like, do they need to know? So the thing that's really good about Bitcoin's rough consensus is that you actually want it to be kind of unclear. Because it's the same game with money. We all want the money that everybody else wants. Like, I have my own opinions about how I think Bitcoin should scale, what I think about Schnorr, what I think about Lightning Network. But they're not necessarily the same with everybody else's opinions. I just know that I want the Bitcoin that everybody else wants. I don't want to be on the wrong side of any of those decisions. So you sort of have this rough game where everyone's like talking to everyone else, being like, well, what do you think of this? How do you understand this? Which way should this go? But you don't have like a central community that decides what is Bitcoin. And so if we ever had another contentious hard fork like we experienced with Bitcoin Cash, or almost experienced with SegWit 2x, you get this weird thing where like you don't know how that's going to play out. There were futures markets that predicted some stuff, but you talk to one person and they're like, I think this is the way the world's going to go. You talk to another person and they say, I think this is the way the world's going to go. And that's actually really good because it makes changing Bitcoin so hard. Because you don't want to support any change in Bitcoin unless you know it has overwhelming consensus. And again, this is one of my favorite features of Bitcoin, is that I know I can lock my coins in a safe deposit box at the bank, and Bitcoin will just keep working as it is. That is so essential to me as an investor. If I didn't have that guarantee, if I had a coin that hard forked every 3 months, I'd be terrified. I could never go on vacation for 3 months. Like, what if they change the fundamental rules of what it is, and I'm locked out of my coins, I got to check in and evaluate all the time that it's still working. And one of the amazing things about Bitcoin is you can just disappear for a year, and come back. And you know, there's still going to be 21 million of them, it's still going to be all about security, and it's still going to be the best money the world's ever seen. How exactly, are blocks going to be a little bigger or a little smaller? We're going to use different signature scheme. Are we going to have these features that support privacy, or these features that are better for scalability? Is it going to be easier or harder to run a Bitcoin node behind Tor? Like, the details, you have to follow everything all the time, but you know it's just going to keep working the way it always has, from the sense of it being secure and scarce. And I love that.
So, as someone who doesn't know very much about this at all, like, can you speak to how that? So it doesn't change very much, but there is like a head maintainer that you alluded to earlier. And so, if those minor changes that you're talking about, how do those happen, and who triggers that actually?
Yeah, because there is sort of like a soft power behind the scenes. Questions about changes and how those happen and what's going on behind the scenes. And there is kind of a soft power. Now, there's consensus and there's non-consensus changes. Consensus-wise, Bitcoin effectively doesn't change. You can run Satoshi's old client, and it will still sync all the way up to Bitcoin today. Now, there is some asterisks there because of that database upgrade, which is just to a more performant database. And also the reality is the new Bitcoin software is so much more efficient than the old Bitcoin software. Like I referenced OpenSSL before, and compress versus uncompressed public keys. OpenSSL very inefficient. So Bitcoin wrote its own version of OpenSSL called libsec 256, which is the curve, the elliptical curve Bitcoin uses. We call it sec 256 K1. Bitcoin wrote its own implementation of OpenSSL. Its feature compatible, it's exactly identical, but it's 6 times faster. So if you run an old Bitcoin core node, or if you run a Bitcoin core node using the old software, you need a much beefier machine. If you run a Bitcoin core node using today's software, you don't need such a performant machine, which is pretty neat because remember with Bitcoin, one of the things of verifying your Bitcoin is you have to go through every single block and every transaction in it and make sure that 21 million limit, that no coins moved without valid signatures and a host of other rules. That only gets more expensive over time because there's only ever more blocks and transactions. We're never going to get less. It just keeps it pending. And what's amazing about Bitcoin software is that you run a full node today and you do what's called initial block download, where you download everything and verify it, and it's faster than it was 3 years ago. Even though we have way more blocks and transactions. So a lot of the software stuff is these performance improvements. Where it's things like we switched from OpenSSL to this libsec 6K1. It's just a better implementation of verifying and making signatures. So who decides that? There's 5 people that commit access on GitHub who anyone can propose a change on GitHub today for the code and propose a pull request on Bitcoin. And depending on what it was, you might find it gets merged immediately. Like if you're adding documentation, adding test coverage, those types of things can get merged really quickly. But if you're proposing like a way that nodes gossip together, that kind of thing might be more hard. If you're proposing like a consensus change, you got to get a bunch of people to agree. But in terms of who has the power, like if Vladimir merges something and the community doesn't like it, well, they don't have to run that software. There's no auto updating with Bitcoin. And again, it's designed to be backwards compatible. That's sort of the ethos of Bitcoin. So you have to convince people to opt into that upgrade. So there's a whole social element on top of it. Anyone can fork the GitHub repo, create their own version of Bitcoin. Many people have tried. But you have to get the community to say, hey, I want this. And ultimately, what enforces that consensus is economic nodes. So if you are an important part of the Bitcoin ecosystem in terms of transacting, and you're saying, like, this incompatible piece of software isn't Bitcoin. My piece of software is Bitcoin. If you send me a transaction on the wrong Bitcoin, I'm not going to accept it. That's a really cool. It's also very aggressive. So it's almost like warring factions of Bitcoin. But if you say that, and enough other people who are economically significant nodes are saying the same things, you might have users and developers and miners coalesce again, it's rough consensus. There's no way to know. So when we had Bitcoin Cash and SegWit, this was in SegWit 2x, this was in 2017 and 18, there were different ideas for the vision for Bitcoin and different software, and total chaos in terms of like which is going to be the one, which is going to be the winner. And one of the craziest things is that you have miners signaling, saying, remember how I said you can sign, you can put messages in the Coinbase message? You can also signal stuff in block headers, which is another part of Bitcoin block. So you had miners signaling in the blockhead, like, hey, we support this change, and saying that they were running software that competed with Bitcoin Core, but using Bitcoin Core to signal that they were against Bitcoin Core. Because they didn't trust the software. They didn't want to run the competing software, but they wanted to signal a protest vote in their mind. Well, they learned it's not a vote. It doesn't matter if 80% of the miners think one thing. The economic nodes are otherwise incentivized. The miners will follow the best economics. So it's a really messy, weird game theoretical thing. But you can kind of think of like economic nodes are the dog and miners are the tail. And the tail doesn't wag the dog. We learned that lesson definitively in 2017, 2018. Maybe it was obvious a long time before, but now it's really we actually saw it play out.
I was just wondering if you have any thoughts on like the rise of quantum computing, how many effects on the security of the blockchain?
Yeah, so the question about the rise of quantum computing and the effects it might have on blockchain. And this is like a perennial, Bitcoin's gonna die because the quantum computer is gonna like, solve everything. And there was that story about quantum supremacy, Google achieving 59 qubits. Long term, it's something to consider about Bitcoin because ECDSA relies on cryptography working, and a quantum computer would severely, wouldn't completely break it, but it would make it much easier to reverse engineer private key from public key. So that would be very bad because that's what defends our signatures. So there's two important things to know about this. The first is that we're talking like many decades away, if ever. So this is not like a risk to your funds today. The second is that hash functions are quantum safe. SHA-256, right, MD-160, these are not something that would be threatened by a quantum computer. And Bitcoin addresses are hashed. So you take a public key and you hash it several times, and that's what you give out as your Bitcoin address. So as long as you haven't spent those from that address before, which is a big Bitcoin no-no best practice for many, many years, you never reuse an address. You only use it to receive funds, and then you spend it, but you never reuse that address or that private key. As long as you've never done that, even if somebody had a quantum computer, then they wouldn't be able to reverse engineer your public key, or your private key for your public key. And your public key is only revealed when you spend. So it would only be if you were reusing an address where this would be a concern. And the other thing to think about is that now with SegWit, we have something called script versioning. Script versioning provides a mechanism for different signature schemes as upgrades via software. So if we have Schnorr in the future, which seems roughly like there's a lot of consensus to do that, but after seeing SegWit not get delayed for so long, like I can't say Schnorr is going to happen next, but it seems, you talk to core devs and they're all like really excited about Schnorr. You talk to end users and they seem excited about Schnorr. Like I get you with somebody who's really anti-Schnorr signatures. So I think we're going to see an upgrade from typical ECDSA signatures to Schnorr signatures at some point in the next 2 years, maybe sooner. And so that will be a good application of that script versioning. But another application of that would be to pick a different signature scheme. So if there was like, in 20 or 30 years, we're like, hey, this may only be secure for another 10 years, we should do something about it. It would be scary because everyone would have to agree on a signature scheme. And as we've seen with any change, there's a winner and a loser. Maybe somebody has a patent on their scheme, so they want to use that one. I don't think Bitcoiners would fall for that, but like you could see some hypothetical situation where faction A in Bitcoin wants this signature scheme, and faction B in Bitcoin wants that signature scheme, and we're doing SegWit 2x all over again, potentially. But I think that's an existential threat, and it's pretty based on like the math. Like one signature scheme is clearly better, it scales better, it uses less bytes, its security guarantees are stronger. Like people would probably just pick that one. And there are like even cool mechanisms. One of the other counter arguments to this point is people would say, well, when you reveal your private key to migrate, when you reveal your public key rather by signing with the private key, in order to move your funds, to migrate to a different signature scheme. At that moment, you're at risk. And there are some clever ways where this is really a non-issue. I kind of have to show it on the whiteboard, but basically, there's no situation where I'm worried about this being a problem, at least for decades. In decades, maybe, but this is like so low on my list. But it's always when people are like, oh, this cryptography could break it. If you learn more about how ECDSA works, it's really cool. It's not that complicated. It's just like it goes down a branch of math that we don't learn in high school because it's so not useful for anything we do. But you can actually learn this in like a weekend. It's not rocket science. It works.
So this is kind of like a two-part question. So I know that like 50% of like the mining, or approximately it's estimated that 50% of the mining happens in China. So I'm just curious, what do you see, like, especially with the geopolitical climate that we're in today with China and the US, do you see that as like a risk to Bitcoin? So that's part one. And part two, so with the 21 million Bitcoin and 18 million already being mined, I know there's companies like Layer 1 who are planning to come to Texas and build their Bitcoin mining operations in West Texas, and then there's stuff in Rockdale. Do you think that like there's going to be much effectiveness in that, or like I'm kind of curious as to like what you can actually achieve when more than 50% has already been mined.
Yeah, so questions about mining centralization, and then the effect of China being the largest miners in the world.
Right.
Let's talk about mining centralization first and China second. So mining centralization was historically, I was much more concerned about this than I am now. Because what you had is this arms race where somebody would come out with a new chip that was significantly better than everything else on the market. And remember how Bitcoin works. The emission schedule is fairly set in stone. There is some wiggle room because there's 2-week delays in these difficulty adjustments. So it bounces around. It can be a little faster or a little slower, but we're on that long-term runway schedule perfectly. And so if you come out with new hardware that's like 3 times better than what's out there, and everyone's competing for the same reward, but you're 3 times more effective, well, you're just going to win. And so the name of the game in Bitcoin mining in years past was like, get the equipment as soon as possible. And we saw this in a really kind of nasty thing, which was like, you get your equipment from China, and it would show up, and it would be like, this thing seems like it's been plugged in for a while. And they'd say like, oh, well, we were just doing QA testing, but like for a month. Because the most beneficial gains of that chip were in that brief time window when it had an advantage. So you were going to make most of your money in that early, let's say month, and then the rest of the lifespan of this chip, as everybody else got the new chips, you would be far less profitable. And so when that was the case, it was all about sourcing the equipment, getting it sooner and faster than everybody else. And we saw so many scams in the mining world. So people would be like, all right, in order to get this chip, you have to pre-buy it, like Indiegogo style, and crowdfund it, and then of course people like absconded with funds, or the chip they delivered was 4 months late and way below the spec, and so this used to be like a really, really big problem. As the chips get more and more efficient, we're approaching the theoretical maximum efficiency we can have. They're just getting so tiny, and so as that happens, the efficiency gains are getting smaller and smaller and smaller. So this means the chip length is much, in terms of the duration that you can use this chip, it's getting much longer. And so this sort of changes the nature of that mining centralization, because you start with like, who can be closest to the person who physically makes the chip, which is historically was always in China, and get access to it first. And that was where all the money was. And now, if you have a chip that might be good for a couple of years, it switches to who can be competitive in power and operations. And that's something that power is inherently decentralized. And this is a really cool one. This is not for me. This is Bitcoin Core Dev Matt Corallo was the one that got me excited about this. But basically, you can find lots of places where you can grab some cheap energy. But you can't scale it up 10x and 10x and 10x again, because there's a natural diseconomy of scale in energy production. So this just naturally pushes Bitcoin towards decentralization. So I'll give you an example. There are some students here that are trying to take the excess. Well, do you want to talk about it?
Yeah. So basically, are y'all familiar with flares on natural gas sites, the big flame you see? And that's basically as a byproduct of oil so valuable and gas is so cheap and plentiful, but you get both out of the wellhead, so you have to do something with that. So it's just more efficient to burn it off than to build a multi-million-dollar pipeline. So what we're doing is we're going in and we're capturing that natural gas at the wellhead on site, running it through a generator, so it's free electricity, and then using that to power Bitcoin mining on well site without any outside infrastructure. And all you need is internet access.
And so that's a really good, neat example of like somewhere where you're just like, oh, I can get this. And you can, but at there's only so much natural gas in each site. Now maybe you can get all of it, or maybe you can expand to other sites. But you can't just say like, oh, I want to just increase this 1,000x because my business is really good. There's only an amount that's coming off. So you have to scoop up all these places. And you see this in lots of things. So you see this in like hydropower, where some place has a giant dam, it lets out water at a very predictable rate, creates power 24/7 at this predictable rate, and it's more than they need locally. So they sell it really, really cheaply. But, and you see this in Wenatchee, Washington, is the largest mining operations in the US, and they have hydropower. The town of Wenatchee has banned new mining operation installations for the last couple of years because they don't want like 90% of their power going to cryptocurrency miners, because now their whole town is exposed. Like if the price of cryptocurrency falls, then maybe these guys turn off their mining equipment and they're like, but what do we do with our dam? So they'll let you have some, but they won't let you scale it up 100x. In China, historically, we saw a somewhat problem of central planning is that it's hard to know where you're seeing economic productivity. So one of the measures that the central government would use to allocate capital would say, well, who's using the most energy? Because if you're using more energy, then you're probably producing more, like you have factories and growth. So we should factor that into our central planning on housing and other things. So if you're a local governor in China of a region, you're thinking, well, I want the most energy to be consumed, and they don't have the same concerns about environmentalism that we have in other countries. So if somebody comes along to you saying, hey, I want to run this Bitcoin mining here, and I'll take a bunch of your energy, and you're like, well, yeah, that's good for me, I'll do that. And I'll do it really cheaply. But again, you can't scale it up 1,000x. So there's all these opportunities with different energy options where you might be able to skim some really cheap energy. Not a ton, but a lot. If you do this in a ton of places, the mining gets really decentralized, especially as chips have longer life, and the game is about the energy and not the sourcing of the chips. So that's really, really exciting. Majority of Bitcoin mining, about 75%, is estimated to come from renewable resources, which is pretty neat. So Bitcoin's kind of like driving some of that innovation. So on the chip side, very confident about that. It's getting better. We have more competitors coming online. Bitmain, who was historically a bad actor in the space, largely funded Bitcoin Cash, lost a ton of money selling all the Bitcoin for Bitcoin Cash. It's kind of beautiful. And their chips just haven't gotten better in a long time. Their lead chip guy defected to another company. So I think we're seeing like a better equilibrium in chips. But in terms of China, I mean, remember China has banned Bitcoin many times. Like China bans Bitcoin as a perennial in Bitcoin. It hasn't stopped Bitcoin in China. So I don't see that changing in the future, but again, as the chips have longer lives and we're starting to see manufacturing in Taiwan and other places, it's going to be less relevant. And I think much more likely is they'll issue their own cryptocurrency, and again, that will have this amazing effect on boosting demand in Bitcoin. So I don't think it's without concern, but I think all these concerns are like much lower than they used to be.
If there's any regulations that you could change, like government regulations on crypto, what would it be?
So the question is, what government regulation would I change on crypto if I could? That would be so nice. I wish I could. So one really big thing is the government requires you follow these know your customer laws. And they're bad for multiple reasons. They're bad for customers because they create honeypots of data. So if you want to buy Bitcoin on like Coinbase, they're probably going to ask for a bunch of identifying information, right? Social Security for sure. I haven't gone through their process in a very long time, so I know it's changing. But I would assume an identity document like a passport or driver's license. I would assume a copy of your utility bill. So you have these companies just sitting on, and they have millions of users. So they're sitting on these massive troves of this data, and we've seen what happens. T-Mobile 3 years ago lost 40 million customer Social Security numbers. That sucks, but when you have millions of people's very sensitive data in one place, that's like kind of inevitable that that's going to happen sometimes. So that's a really bad thing from a privacy perspective. It's also bad for a Bitcoin network perspective, that all these, so then you buy some Bitcoin from Coinbase, you withdraw it to your address, your Bitcoin address say is X, and now Coinbase knows, I know your name, I know your social security, I know where you live, and I know your Bitcoin address. And you can bet their record sharing with the government. So I don't like that. I wish they didn't have the ability to know that stuff. And I wish it were easier for competition as a result. Because if you have to get money transmitter licenses and bit licenses, comply with a whole host of government regulations. I mean, Coinbase spends so much money on lawyers and lobbyists because they have to. But if you do all that, you're probably not going to get a lot of Coinbase competitors. You're probably going to get like one Coinbase that spends a lot on lobbyists, but they're not trying to eliminate all laws. Their interest is eliminating laws that hurt them. But more regulation, if they can seem friendly to regulators and say, sure, I don't know all this regulation, it would be hard for our competitors, but we could comply with it. But that would be like optimal for Coinbase. So I wish they were just totally hands-off. I wish there was no bit license. I wish there was no requirement for money transmitter licenses. I wish there was no KYC. And I wish there was no capital gains tax. That's a big one.
So would you also get rid of like the SFT and the AML, so the anti-money laundering and combating foreign terrorism laws as well?
What was the SFT one?
Combating foreign terrorism.
And so the thing to keep in mind with all of this is that committing crimes with money is still very illegal. It's a weird thing that money laundering, which is another word for privacy, is illegal. The act of, like, if you do something illegal with money, like we're not paying your taxes and you're hiding it, well, not paying your taxes should be illegal. If you're funding terrorism, well, that's illegal. The money laundering part seems strange that we make that a crime, because that's financial privacy. So I want all the illegal things to be illegal. I don't know why privacy should be illegal. So yeah, that's kind of what I'm saying about that.
One last question for you. What do you think is the best platform to buy like Bitcoin on?
The best platform to buy Bitcoin. I wish I had like a better recommendation.
For the everyday investor.
But so if you're doing small amounts, Square is really neat. They have this thing called the Cash App. And I think the limit's like $2,500 a week, which I imagine for university students would not be a problem. But if somebody comes to Bitcoin and wants to buy like $50,000, and the answer is like, well, it's going to take you a half a year. And so they're neat for a lot of reasons. They're like a good actor in the space. There are a lot of really bad actors in the space. Coinbase took forever to update their software, which is very confusing, very concerning as an end user. You don't want somebody who's running like really old software. So they didn't support SegWit for a really long time. They didn't even batch their transactions for a really long time. So that's like very scary. Are they technically competent? They've had a lot of downtime. They also supported SegWit 2x, which was pretty blatantly like an attempt to control what Bitcoin is and mold it in their interest. And that did fail spectacularly, but you kind of have to remember like they might not be good for Bitcoin. They're the biggest. So it's like, I don't know that there's like somebody better, but for smaller stuff, Cash App is great. But it's all kind of Wild West. It's like, good luck getting someone to talk to you on the phone. Your bank might freeze the transaction or get mad at you. I think those days are mostly over, but like banks don't like Bitcoin because they can't eat their KYC. That's how they know that what you're doing with that Bitcoin or who had it before you got it. It's very important for them. So I would say Cash App if you're doing under the limits.
Okay. So part of the question on the decentralization and like the ability for the concept of Bitcoin being like spend things freely without having that limitations. Is there not a ways to kind of circumvent kind of like create your own just receiving ends with like for Bitcoin to the wallet?
Yeah.
It seems like that's what we should supposed to do, but it seems like you're saying the way to like get Bitcoins is from like a large exchange or something like Coinbase or something.
Yeah. So the question is about like circumventing third parties in transacting in Bitcoin. And yes, there is software to do just that. Like BTC Pay Server is a popular free open source tool that you can run and just receive Bitcoin payments. The best way to make Bitcoin is to earn it directly. Very few people want to spend their Bitcoin. So it's rare that you can find somebody who's eager to pay you in Bitcoin. But if you can, it's fantastic to just earn it directly. And it sort of increases Bitcoin's anonymity a little bit because there's a transaction on the blockchain moving from address A to address B, but there's no corresponding there's no corresponding exchange record of like your government ID and your name and social security number that's probably being shared with government. The other thing that's tricky in that regard is that Bitcoin does have transaction fees. And so if you're selling like a t-shirt for $10 and the transaction fee is 40 cents, like maybe that starts to eat into your profits a little bit. And we could probably expect transaction fees will rise as more people use Bitcoin in the future. Now you can use the Lightning Network and then you get your transactions down really cheap, but that's a more complicated thing. And BTC Payment Server will let you, it's like an easy way to set up invoicing using Lightning Network. So I like Bitcoin's use case as the sound money, scarce thing that maybe you're not transacting it every day, but you do for big stuff. But it's great if you can earn it. I mean, the coolest one, I remember in 2014, Argentina was the cheapest country in the world to buy Bitcoin. And that was a very weird thing. First of all, everything in Argentina is just expensive. Not rent, but if you want to buy an iPhone, it's like double or triple the cost. Everything that's imported is really, really expensive. And they also had capital controls and hyperinflation, so it's like a really good product for an Argentinian to own, and it's the cheapest place in the world to buy it. And that's really counterintuitive and weird. The thing about that was driving it was remote workers. So imagine you're like a software engineer or designer living in Buenos Aires, or anywhere in Argentina for that matter, and you're working for, say, an American company remotely. And if they pay you via bank wire, 50% of that money is going to get caught to capital control just for the exchange rate. And then the remainder you have to pay taxes on. With Bitcoin, you should pay your taxes, but it becomes harder for the Argentinian tax authority to enforce. So people were like really incentivized to learn about how Bitcoin worked. They still are. And so they could get paid in Bitcoin. And then the reason why the price of Bitcoin was low there is that they might believe in Bitcoin, they might like Bitcoin, they might use and understand Bitcoin, but it's their salary. They have to pay their rent, they have to buy food, they have to pay for stuff. So they were selling some percentage, often very high percentage of that Bitcoin. And millions of dollars a month is flooding the market in Buenos Aires of selling Bitcoin, and it's not a rich place. If there's not a buyer, that's where you get that low price. So that's a use case where it's so easy, like once a week or a month, whatever that contract schedule was, they just got a lot of Bitcoin. That's like game changing and really, really impressive. But you could set up BTC Pay server and sell stickers. People literally do that. Any other questions?
I'll follow up with one more question.
Yeah.
You mentioned like earlier in the presentation that like you could learn from basics or a few things about kind of the actual photography. What would you do like the
So there's a book. I was a technical reviewer of an O'Reilly book called Programming Bitcoin. It's Python. It's written by Jimmy Song. And you learn about finite fields and ECDSA, and you implement it from scratch. And eventually, all of it will sign a Bitcoin transaction. I will say that book is a bit expensive. It's about $70. The content you can find on Jimmy's GitHub for free. It doesn't have as nice a formatting, but it works just the same. And it's got really cool like IPython notebooks, so you can like run the code in the browser and see how it works. So I really recommend that. I think it's like the best stuff. There's also a guy named Justin Moon in Austin, who's also a friend of mine, and he runs something called the Biddle Boot Camp. It's kind of a weird play on words, but BUIDL, and he teaches some of this stuff as well. It's a more entry level, and so that's another option. And there's tons of free resources. It's all open source stuff, so it's not proprietary to Bitcoin.
How did you get into Bitcoin? Because everyone has a different story, so what attracted you?
Yeah, I wish I had a better Bitcoin origin story, because I did the thing that it seems like most people do. They hear about it, they think it's stupid. I was like, oh, it's another PayPal. Like, why is the world use it? And I kind of ignored it. But that's a common path that people go through. Is you hear about it, think it's stupid, then you read about it some more in the news, potentially when the price is at like an all-time high, and you're like, oh, that thing's still around. Its price keeps going up. Like, why is that interesting? And then you dig into it and you learn about it. And I think for me, the really interesting stuff was seeing how all this capital controls plays out. Because I went to Argentina in 2014, in 2013, and I saw some of this stuff firsthand. And it's like really, really weird when, you know, there's like basic things about money that you assume how it works one way, and then you go to a country where it doesn't work that way. And so you'd show up and you, like a typical thing for an American tourist would be like, oh, I'm gonna stay at a hotel and I'm gonna pay with my credit card. And you'd say, no, it's okay, like my bank doesn't charge me a foreign exchange fee. And you're like, yeah, but their government takes 50% of the money. So that's really, really bad. That's not broken out on your statement, but you'd be like, why is this hotel so expensive? This is a poor country. But half the money didn't go to the hotel. And so then you start to learn that, you see what people are doing to get around it, and you just hear crazy stories. I had a friend living in Argentina in 2014, and once a month, and he was American, spending his dollars, and once a month he would take a ferry to Uruguay, where they don't have capital controls, and he would go to the ATM and pull out like thousands of dollars, and he would get back on the ferry and go back to Buenos Aires. I mean, the first time he did it, you know, he went with his wife and his daughter, and it was like, you know, in Uruguay, like, how neat is this? And fast forward, he's been living there for like a year or two, and it's just this pain in the ass. It's part of his life. And you start to see stuff like that, and you're like, well, why does that work that way? And why isn't there a way around it? And, you know, what are the other solutions? And, you know, there were all these ways that people were combating capital controls in Argentina, and some of them very clever, but nothing like Bitcoin. Bitcoin to solve this problem. Then people living there could just get a Coinbase account every month, buy some amount of Bitcoin, and then sell it locally for pieces. So that's, you know, beats having to travel to another country and pick up cash. So that was the thing that got me, like, to say, hey, this like solves a problem that I don't think other people realize is a problem, because like Venmo for me works just fine. Like, I can just pay my rent with Venmo. Why do I need another Venmo? But as you see in a place where it doesn't work, and then you start to learn how fragile like the Venmos are of the world. I think I once paid a friend back for lunch on Venmo and wrote Cuban sandwich in the memo field, because we eat Cuban sandwiches. Any payment with Cuba is flagged, because you're not allowed to send money to Cuba. And they sent me this bizarre message about like, what am I doing with my transaction? And I'm like, well, it's a Cuban sandwich. Like, we ate it in California. I don't know what you want from me. To their credit, I ultimately did get that money back. But you know, as you start to see like how broken the system is and what a beautiful solution Bitcoin is, then it gets very exciting. And then the more time you spend in it, the more you hear these stories and you realize that they do impact people. And maybe my $10 for a Cuban sandwich isn't a huge life-altering issue, but there are cases of people having their PayPal account frozen with their life savings, and it causes them enormous harm. In Bitcoin, you can just be your own bank.
Okay, so yeah, there's a large use case, like you said, for these like developing countries and like Venezuela, Buenos Aires, right? But what do you think, or what do you see as the biggest bear case for mass adoption, let's say, in developing countries like the United States and like Europe, for example?
The bear case meaning that you think
like
people won't
adopt mass
Yeah,
adoption.
I mean, I think the biggest risk to Bitcoin is that people just don't care. Like, if this isn't a problem for you, why would you own some Bitcoin? And maybe you'd be looking around saying like, well, it's going to be a problem for, like, I know that Venezuela is not the last place that's going to mess up their money. And so I know that the next Venezuela is going to need this too, and I want to get it before they do. But, you know, that's a tough one. Like, maybe we'll see less Venezuelas for 5 years. I don't think we'll ever see no Venezuelas. Like, that's just a logical conclusion of what governments do. But maybe there'll be less of them for 5 years. And, you know, you can't make somebody want Bitcoin. So I think that is the biggest bear cases. It's just this niche digital gold bug thing that people who, you know, own guns and want to be left alone like to have, and nobody else wants it. And that wouldn't be ideal. But that's still a $1 trillion market.
Yeah.
You mentioned that like there was an issue with like freezing your Bitcoin account, but if you have like a Coinbase account, can't that be frozen?
Yeah, so the question is, I'm repeating these for the live stream. So the question is about if Bitcoin accounts can't be frozen, what about frozen Coinbase accounts? And one of the biggest lessons in Bitcoin that people are learning, and this goes back to the question about social scalability that this is like trickling down, is that if it's not your keys, it's not your Bitcoin. That's attributed to Andreas Antonopoulos. He's like an awesome Bitcoin speaker in many ways. And so one of the big things to know is that if you have Bitcoins on Coinbase, you don't own Bitcoin. You have Coinbase IOUs for Bitcoin. And most of the time, those IOUs are just as good as Bitcoin. When you go say, hey, Coinbase, I'd like my Bitcoin, please. Or I'd like to sell it for dollars and I'd like dollars, please. Coinbase is pretty good about honoring that request until they aren't. And there's been all kinds of cases where you're not even doing anything illegal. Well, let's start with like a gray area. Maybe you're involved in the marijuana industry, the legal marijuana industry in California. So in California, you're not a criminal. You have a storefront, you pay taxes. The cops, are not like cracking down on you. But federally, that is probably arguably illegal. I don't know the latest. It seems illegal. And Coinbase would say, well, we don't want a relationship with you because this messes with their banking partners and their FDIC insurance, so we're closing your account. That can be kind of second. Take something that's not even illegal anywhere. Let's say you're an adult online entertainer, a campground. Coinbase can close your account for that. That's not illegal, but it's not going to happen to you. So, not your keys, not your Bitcoin, and you have to decide if that risk is worth it to you. Not only is there account closing, which in the long run you should get your coins back, like unless you stole them. Coinbase is probably not in the business model of trying to rob you. They are $1 billion company. They're backed by investors like the NASDAQ. Like, probably ultimately they're going to let you get your money, although maybe not easily. Maybe they will give it to you in Bitcoin. Maybe they will force sell it in dollars. Who knows what price you'll get when that happens. Probably you will get it back, but that's like a real big headache. The bigger fear is like, do they even have your money? A lot of people had money at Mt. Gox, and they had IOUs for Bitcoin on Mt. Gox, and then they found out that those IOUs weren't working. So I'm not saying that Coinbase is insolvent. They're reasonably competent. They're a big company. They're not idiots. They have a lot of incentive to do security right. They're also the most attacked website on the planet. Because if you can hack Coinbase, you get money. And most websites, it's hard to monetize an attack. But with Coinbase, you can. And there's all kinds of attacks. And they're aware of this. And they have security teams. They're smart. People will get your grandma's login credentials for Coinbase, and then or login credentials for Bank of America, and then create a Coinbase account under grandma's name, and say, okay, I want to withdraw. I want to buy $500 of Bitcoin, and when that clears, they withdraw the Bitcoin. And then grandma checks her statement at the end of the month, and grandma's like, what is this? And ultimately, the bank will charge that back, and Coinbase will eat it. Now, I don't think Coinbase is eating billions of dollars of these chargebacks, but we just can't know how solid they are. And so, not your keys, not your Bitcoin, buyer beware of this. But you could still buy, if you bought Bitcoin and then pulled it off, your duration of exposure would be very small. So maybe you're waiting 2 days, 3 days, 7 days until they say your transaction cleared, and then they'll give you your Bitcoin. Maybe you're willing to take that risk, but just pull your coins off.
So how would you transfer from to a separate wallet? Is that your own?
Exactly. So the easiest way would be, I would say, get a cold card or a Trezor, which are hardware wallets. But there are so many free open source Bitcoin wallets. You could run Bitcoin Core. You could do a lot of stuff depending on how secure you want to be. But a wallet where you can control your coins.
Related to the same subject, not your key, not Bitcoin. What do you think about companies like BlockFi that are giving you 6.2% interest on your Bitcoin for depositing your Bitcoin with them?
I don't
putting
know.
your Bitcoin to work type of deal.
Yeah, I don't know what they're doing. It sounds really suspicious. Where are they getting that 6.25%?
Well, I think they loan out Bitcoin. They take loans, so you can loan out your Bitcoin and get for it, collateralized loans.
Yeah, if you look at the interest rates on loans, though, because it's loaned out to people short.
Right.
That's the use case that I've seen at least a lot of, and those interest rates are 1 or 2% per year.
Right.
And you're getting 1 or 2% per year, which that's not nothing, 1 or 2% per year. But you're taking on all of the counterparty risk at that point.
Okay.
So
It's actually probably
yeah, you got to decide how solvent do you think they are.
because that's a gap for it.
Okay. And maybe you're like, well, I'd be able to tell, and I'll withdraw my stuff first. But
To that, and then
I don't do it. My Bitcoin is mine. I don't trust that to anyone else.
Another one.
Yeah.
Yeah, because it's really
Well,
I'm wearing this.
Thank you.
Thank you guys. Yeah. Anybody like to talk about